I think how I pitch stablecoins and blockchain to friends is, look, this is just digital payments, right? For the first, it's just a dollar representation on a ledger that can settle instantly, and you just make it super simple. When you send money from Venmo to Bank of America, you don't actually really know. Let's put it this way: most retail users do not know what's actually happening under the hood. All they care about is, I want my money from here to there quickly and cheaply. And if you can deliver that experience and deliver 100x improvement on that experience for businesses or individuals, like, that's going to win, right? And so I think it's simplifying that piece of the equation.
Welcome to the Edge Podcast. I'm DeFi Dad here with Nomadic. Today's show spotlights the co-founder and CEO of Agora, Nick Van Eck.
You might recognize Nick's last name, Van Eck, for good reason, because his family has a storied history in finance. We talk all about how their family was early to the gold trade, how Nick's father was very early to ETFs, and then how Nick now is early to the digital asset boom.
As a listener, you're going to get insights on Agora, but he has that investor perspective to tell us, where are we in the adoption curve of stablecoins? Where are we in the adoption curve of money moving on chain?
Yeah, and we asked Nick a lot of things that I was actually curious about. Just how do these payments issuers make money? And he breaks down sort of the ins and outs of how he's helping these legacy institutional or enterprise businesses come on chain.
So before we get started, just a quick reminder, you can subscribe at the-edge.xyz. That's the best place to subscribe to the Edge newsletter and to get real-time notifications for the Edge podcast anytime we release a new episode. You can also check out our link tree at edge_pod. That's the best place to subscribe to the Edge podcast on Spotify, Apple Podcasts, or YouTube. And then one last shout out to all of our sponsors that make the Edge podcast and the Edge newsletter possible. Sponsors like TOROS Finance and REDSTONE. Otherwise, we hope you enjoy the episode. Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge Podcast and Edge newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. NEUTRL is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is now officially live to mint NUSD and start earning NEUTRL points. Learn more at neutral.fi. All right, let's introduce Nick Van Eck, CEO and co-founder of Agora. Nick, welcome to the Edge podcast. How are you doing?
I'm doing well. Thanks for having me.
So normally we start with our guest's background, but given the rich history of your family in finance, I think we have to talk more about the Van Eck family first. So what can you tell us about all that your family has contributed to finance over the years?
Yeah, so I was actually at Van Eck's 70th birthday party last night in New York City. So, my grandfather started the business in 1955. He originally started it as it was called like the International Investors Group or something. And the whole premise was to give, American investors opportunities to foreign equities in like the post-World War II growth that was happening there. That's how the company originally got started. He became very famous, at least, within the United States in 1968 through 71, because he started the first gold fund in the United States when it was still illegal to own gold bullion. And so he started that in 1968 thinking the peg would break because of the deficit spending from the U.S. government. Sure enough, the peg broke in 1971, and that led it to being the best performing mutual fund in the U.S. that decade. As gold went from $35 to several $100s, and the S&P was flat, and so that was a huge prediction. And he continued to grow the firm. My dad is joined the firm in the 90s, is the CEO and runs the firm today. Started the ETF business in 2006 with actually GDX, which is gold miner fund, and so gold is still like a very large portion of the business today. But I think what's really guided the firm throughout its history is in looking forward to new trends or new growth or investment opportunities that are unique. And that really informed a lot of my development in childhood. Like I think it's like anyone, right? Well, you get in, you take an interest in what your parents do, whether they're a firefighter or run an investment firm. And so I got exposed to investing in markets at a very early age, and took an interest in it because of the interdisciplinary requirements, the curiosity that was required, and because you were competing against some of the smartest people in the world because the prizes were big, but also you to put your money where your mouth is, which was just like kind of who I am. And so I knew that I wanted to get into the investing world right out of college. Was trying to figure out what in the investing world I wanted to do when I worked at a hedge fund in 2016, and the PM there was actually buying Bitcoin in his portfolio, and had just written like a 15-page thesis paper on why Bitcoin was going to hit 100K by 2030, trading in a few $100s. This is pre-second halving. I was like, okay, this guy's built a multi-billion-dollar hedge fund. He's probably smarter than I am or knows a thing or two. Maybe I should read this white paper. And I did, and the idea of a non-sovereign form of money and peer-to-peer cash system immediately resonated with me because of like the gold history in my family. Like I think it's like just like very similar, and people have juxtaposed them for decades now, right? The whole Peter Schiff versus Bitcoin thing, and to me, in maybe a cliche way, like it was obvious that this was 10x better than gold. Like Bitcoin was 10x better than gold, so I started buying it at the time. I would say my dad didn't really understand it at the beginning, but to his credit was like very early on in, being persuaded by the case. And so in 2017, Van Eck filed for the first Bitcoin ETF from an institutional investment firm. And I think they've been ahead of the curve on many things in digital assets since then. They have a liquid fund, obviously all the ETFs and ETPs. They have a venture fund now. And are doing and exploring a lot of more things throughout the digital asset ecosystem. And so, I think have been sort of true to like the original vision of my grandfather, very forward leaning and looking at like what's next and what are good investment opportunities for individuals and enterprises.
I think what like just really stands out is just looking back to it. Your grandfather gets into gold. Your father kind of sees the ETF trade, I think, pretty early. And then you're sitting on the cusp. Yeah. And then you're sitting on the cusp of this digital asset boom that we're, I think, still getting into early innings, but we'll ask you that later. What more can you tell us just about this like common thread? Is it like contrarianism? Is it what is it that's kind of allowed, I guess, like each generation of your family to be sort of at this major inflection point of a new movement in finance?
I think part of it is that we are independent thinkers and we think for ourselves, and sometimes that leads you to being a contrarian, right? I would also say like I am someone that like sort of sticks to my guns and like has conviction and in a variety of different things throughout my life, aspects of my life beyond just like in investing. And so I think that's maybe the common trend. And, of course, if you're willing to put your money where your mouth is, inevitably that'll lead to very large outcomes, right? And I think also like it's being intellectually curious is also very important, right? My grandfather, no one was investing in Europe post World War II, right? He made the decision to do that. Gold is another thing, right? Hey, I'm going to make this prediction that this thing that has been pegged to a fixed rate for decades is going to break its peg. Like that's like I think a crazy, right? Like, and a very bold risk, right? I think my dad saw ETFs very early on. That's been a very large growth driver for the firm. I think their ETF AUM basically has gone from 0 to 150 billion in, about less than 20 years, right? So that was a great bet. And then I think, with Bitcoin and digital assets, it's the same thing, right? Like actually being intellectually curious enough to deeply research a topic and like having conviction that when you understand something well enough, that you need to stick to your guns and believe in that. And I would say like that's sort of what I saw too with digital assets. Like when I got into Bitcoin, I never felt like crypto would be my career. Like I didn't think crypto, Ethereum was around in 2016, but personally, like I didn't understand like why do you need like a decentralized internet computer? Like that to me like made no sense. And then, I spent most of my career in enterprise software investing, so developed, a much greater knowledge base of software, open source, why open source always wins. And then by the time like DeFi summer came around, and you finally had applications that like I wanted to use, right? Whether it was like lending or swapping, I got to see what the financial services industry looked like from my family's business, but I also saw it in my day-to-day job where I was talking to founders that were building, upgrades to core banking systems only for those implementations to fail. And it clicked with me in like 2020, 2021, like, oh, blockchain is just going to eat all of financial services and payments because you open standards, instant settlement, like, composable liquidity, and all these existing systems are like a Frankenstein monster of like 50s, 30s, and like 2010s, like, infrastructure. And so that's why I leaned in. I was like, this is just inevitable, right? It's just inevitable because it's 100x better.
I'm curious, how do you pitch crypto nowadays to friends?
So, I've had many funny experiences pitching crypto to friends over the last decade. I think with Bitcoin, it's just like digital gold. It's simple. I think you need to honestly like oversimplify. I think how I pitch stablecoins and blockchain to friends is, look, this is just digital payments, right? For the first, it's just a dollar representation on a ledger that can settle instantly, and you just make it super simple. And that's like what we try to do with a lot of the enterprises as well. We could talk a little bit more about this. There's sort of like the crypto world and the on-chain world, and then there's traditional enterprises. And like something that I talk a lot about is like our North Star at Agora is like serving Pepsi's CFO, in 10 years, where they're, logged into the Agora web app. They're moving money across their dozens of entities, thousands of suppliers globally, instantly 24/7, accruing real-time yield. Like, and that's like what these people want, but by like trying to say, oh, but you have to do it on an X chain or doing this, like you want to abstract away the cryptoness as much as possible. And like another example I like to use is when you send money from Venmo to Bank of America, you don't actually really know, let's put it this way, most retail users do not know what's actually happening under the hood. All they care about is I want my money from here to there quickly and cheaply. And if you can deliver that experience and deliver 100x improvement on that experience for businesses or individuals, like that's going to win, right? And so I think it's simplifying that piece of the equation.
I was just explaining this to a friend the other day. They were asking me about stablecoins. It's funny because I have very few friends, in my little town that I live in that ask me much about crypto. And one of them just finally must have seen stablecoins in the news and was like, I know you're into this. Like, why do these matter? And I pointed to the idea of it being just a digital dollar. And still, he kind of pushed back and said, yeah, but what about all of the modern day banking that we have? I've got everything online now. What do I need this for? And that's where all of us fall into the trap of really trying to help them understand, well, the 24/7, 365 access has to do with the settlement layer and having something that ultimately gives you guarantees of ownership of that. And all it means to say is that it's having digital cash. I think that stablecoins have finally delivered on this promise of digital cash. I know that you could technically call Bitcoin, you could call Ether, you could call Sol digital cash. It's a value that you are able to easily transfer and have immediate access to, and have it settle nearly instantly or within 10 minutes with Bitcoin. So anyways, long story short, I love that we finally come full circle to this vision. Stable coins are, I think to Tom Lee's point, it's this ChatGPT moment. It's the ultimate product market fit.
That was the best quote of
What a brilliant move.
Token, that was the funniest quote of Token 2049 it's stable coins are, ETH is ChatGPT for whatever. That was amazing. But I think that's right. And also what I'd add is, blockchain and stable coins enable, the exporting of U.S. capital markets to the global south, right? Or to countries where there is, a lack of financial safety, financial opportunity, right? Because either the local currency is, inflating at 30 to 40% a year, or there's fiscal mismanagement or monetary policy mismanagement at the government level, or just because banks don't want to bank you because you don't make enough money for them as a customer. And so stable coins and blockchain can really help export U.S. capital markets and enable, hundreds of millions of people that don't have access to these types of products that Americans, we take for granted, in a cheap and easy way.
Nick, I want to go back to something that you were talking to us before we started rolling here. You're at General Catalyst. You've already been in crypto for a while. I guess personally, you're down the rabbit hole. But what clicks for you and I'm leaving my job, I'm gonna go start this new company? Give us a little bit of insight into that moment, how you started Agora.
Yeah, so GC is obviously a very storied firm. And just an incredible firm. The founders, David and Joel, and everyone built, a wonderful organization. And they actually had led the seed round of Circle. So, I have this sort of aha moment around DeFi Summer and, pitched the managing partners to let me start investing in the space. But they'd already built a very good portfolio by accident, right? So they owned, a very large chunk of Circle. They'd invested in Polymarket, believe it or not, so I spent about 18 months in investing in the space. I came from, I would say growth stage investing, right? So writing very large checks, 25 to 100 million plus. And actually spent a full year passing on everything, because we were seeing this mania of deals, companies getting valued at $8 billion, $10 billion. And you look at the quality of the revenue or just their absolute revenue and you're this company is not worth $1 billion. And so I actually, what I ended up doing a lot of those 18 months is just building connectivity within the industry, right? I led the seed round in a few, early stage, firms, two, interesting ones in DeFi. One that's getting a lot of attention this week is Ostium. And so, I don't know how familiar you are with that team, but Calidor and Marco pitched me and they're yeah, we need to have, RWA perps on chain. And I was thank you. Finally, something that I would want to use. I don't want to trade the 100th largest crypto governance token. I want to trade gold and NASDAQ and these things on chain. So I actually, led the seed round of Ostium when I was with General Catalyst. Another really interesting protocol, Tristero, is doing, dark pools on chain. And, I spent my whole career in the investing world, and I felt like this was really like inning number one. When I first got into Bitcoin in 2016, I thought we were like at inning number three. But to me, you sort of had Tether that operated like a family office, and then Circle, which had one economic partner in Coinbase, and they also like compete with everyone. And I'm like, this is like not the right financial end state. And Tether was sort of like sucking billions of dollars out of like crypto a year. And I was like, stablecoins are going to be at the center of all of this. I was kind of getting a little bit jaded on the investing side, and felt that there weren't enough good founders coming from traditional financial services and payments that were building products in crypto for those types of users, right? And just saying like, hey, the value is instant settlement and low transaction costs. Like, let's go build for Pepsi, right? There's like not really many people doing that. And so I thought, when I was at a point in my life too, where I was like, this is like the time to just go build something and take a lot of risk. Like I was in my late 20s, and I was like, I probably have another like 5 years before I have kids. So like, it's time to go work, like 110 hours a week and kill myself and spend 100% of my time in something I'm really passionate about and care deeply about and believe is the future of finance. Like, this is one of the few times in human history where we're like changing money and market structure. Like, that's amazing. And so, yeah, that's sort of the story there.
Doing this thing and setting out on something before you have kids, I think like it doesn't matter. You can do it after you have kids too, but I think that's important. I actually, the one of the motivating factors for me to go full-time crypto was my wife was pregnant with our first kid. And I was like, you know what? I really want my kid to see me doing what I love and like following my passions. And this kid's going to be born. And I had a good job before, but it wasn't where I wanted to be ultimately. So that for me was like a huge motivator.
No, but that's a great point. Like that was like one of the things that I thought was so annoying as a kid or like not like a kid, but like a teenager when you're trying to figure out like what you want to do, right? Like, what do I want to do with my life, right? My dad would always say like, oh, you got to do what you love and you'll never work a day in your life. And I was like, that is like the least helpful answer ever. Like so pissed as a teenager. Like what kind of response is that? And then like as you spend a few years in the workforce or whatever, you do understand like what that means, which is like you find the thing that you really care deeply about and it's not a job, and then you're A+ at it because it's not a job. And you spend like all your like, and like that's what I realized at GC is like, obviously, I worked very hard in all my jobs, but like when it came to crypto, like I was spending so much time like outside of work, quote unquote, like just reading about crypto and like reading white papers, and I was like, oh, this is what that is like.
Absolutely. I didn't intend this to turn into like Nomadic's sermon corner where I'm giving like wisdom advice, but one more thing I'll tack onto that is I've found through trial and error, it's almost just as hard to go out and get a job you don't want as it is to work a little bit harder and get a job you do want. It's crazy. I think that the difference in effort is not as big as some people think. So anyways, throw that little nugget out there too, in case anybody's listening.
You've been in the space then since I think 2016, or you've been into Bitcoin, been following everything crypto related.
Oh, I've definitely been in the space. I convinced a bunch of my friends to like, they were early, like one of the first 5 employees at Delphi Digital and all these places. I convinced like a bunch of friends actually they got into crypto full time way before I did. So
do you think the space has lost some of the magic that was there early on? Like, I think there was a foundation of understanding why, and that was part of getting into Bitcoin. You would say, oh, this is digital gold or whatever we called it. I remember talking about it as digital cash at one point, but that was one simple use case that made a lot of sense to me. And then even though, to your point, I didn't fully understand what applications would be built with Ethereum, I at least could daydream about them and talk about smart contract related apps. And so that like set up this foundation, which nowadays I feel like people come into the space and they're like, yeah, I saw some guy on TikTok make $1 million, printing some new coin on pump. Like, I'm like, that's not the way you want to enter into the space.
Yeah, I think it's 100% lost some of the magic, but that's just like what happens when industries mature, right? Like when I got into the space, Reddit like was actually like a really good forum for like people that were interested in Bitcoin, like and like crypto. I would not say it is anymore. And you also had people that really cared about the why. And the reason is you only had people that cared about the why because no one made any money off this stuff. Obviously there were people that, bought into Bitcoin at 10 cents or whatever. But like, I think, and I was speaking about this with someone at dinner last night, at the Van Eck event last night, is like DevCon in Bogota was like the last time like I really like felt like magic at a conference like that, like early because it was like sort of like post some of like the bad stuff happening, but it was like, after DeFi summer as well. So like there were a lot of real applications. And, I remember sitting with like Cello, who's the founder of Lemon, which is one of the largest crypto apps in Argentina. And they had just integrated like Aave into like their front end so that like, it was the DeFi mullet in like real life. And I was like, oh my God, like this is crazy. Like, and it was amazing. And I do think we've lost some of that because people see that it's really easy to make money in this space without delivering like, real products or in a very short amount of time. Maybe to, again, play the devil's advocate on that, it's like, okay, well, there's been a lot more capital that's been invested in this technology and in making this a reality because of that, right? But I do think the space has lost a bit of magic, and it does bum me out.
Nick, can you sort of paint us a picture on where you think we're at with this adoption curve of stablecoins right now? And I guess most importantly, are enterprises actually interested?
Yeah, I would say we're top of the second inning. If like we're going to use like the baseball analogy, right? If we look a little bit at stablecoin history, Tether became popular and really won like the trading against governance tokens. Like, I was so early in into crypto. I remember when everything was trading against BTC, right? And like Tether took that over because obviously like why have two volatiles trading against one another, right? I think Circle really had a lot of success, obviously, because they worked with the monopoly exchange in the United States, but also because they were early into DeFi. I would say, and like this was all very much like crypto adoption, right? Like very little real businesses, or real life adoption outside of people that were just holding dollars because it was better than local currency. But like we're really going to step up into a bunch of different gears now. I'd say two things have happened in the last year that have really galvanized traditional enterprises. One is Stripe's acquisition of Bridge and then Privy. And then the second is Genius actually passing, which passed way faster than I thought it would. And so I would say what that did is it made enterprises and financial institutions realize like stablecoins have like arrived, right? I spent my whole career investing in cloud software. Salesforce went public in 2004. Then you had AWS in 2006, Azure GCP in 8 and 10. And now we have like 150 plus public B2B SaaS companies. AWS, Azure GCP are like $100 billion businesses. That's like, Salesforce IPO is now 21 years ago, and it's still like that industry is growing at like a nice clip. So I would say like, I don't know when I would say like the stablecoin industry really started. It's hard to do that perfect date-to-date analogy with like the internet and cloud software. But like, I think it's so early. Like it's going to take 30 years before like really like we have like, almost everything, 30 to 40 or more, right? Before everything is running on these types of rails. And so I think we're just in the second inning, but like these enterprises still need to figure out like key management. Like what stablecoin do I want to use? How does this work with my existing systems? And so we're helping them do that. We're doing a lot of education. And these are like totally new risk compliance rules. So like that's also it as well. It's like there's just it's a whole new world for these enterprises, right? And so like the questions that they would have asked a bank for due diligence or like someone else do not apply, right? And in many cases they don't know what to ask. And so we're helping do some things on the product side to make that easier and say, hey, we have everything out of the box for you. But a lot of it's education, and I still think we're in extremely early days when it comes to enterprise and like sort of the traditional world that is like non-crypto adopting these assets and this technology.
Today, there are an estimated 300 billion in stablecoins. Secretary of Treasury Scott Bessent has, talked about the fact that he believes we'll see trillions in stablecoins. US dollar pegged stablecoins in just the next few years. Where does Agora fit into all of this growth, the evolution of, money moving on chain? I really would like to also understand more about this like institutional grade, enterprise ready stablecoin that you describe. Maybe even just what's the elevator pitch on Agora? The MANTLE Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on MANTLE's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow mantle_official on X.
Katana is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
Yeah, we want to be the enterprise stablecoin infrastructure company. If you're a business, whether you're like a PerpDex or a cross-border payment company or Pepsi, we want to be talking to you if you're thinking about incorporating stablecoins into your business. I would say we started the company about a year after, or less than a year after the Circle DPEG incident. And also you had Terra and FTX and a lot of just financial mismanagement, broadly, right? Obviously, BlockFi, went under as well, and just, Celsius, it's just crazy, right? And so there's a lot of questions around reliability, about the teams and the products. And so something that we wanted to make very clear from day one is we are an institutional grade product. Trust is our business. And so, we only want to work with the largest financial services companies to make sure that your assets are safe and secure, right? So State Street, which is one of the largest custodian banks in the world, is the cash custodian and fund administrator of the Agora Reserve Fund. They oversee tens of trillions of dollars in custody. VanEck, which is my family's business, manages about $175 billion in AUM today. They manage the repo and treasury fund. So you have, blue chip, multi-decade old asset manager that's managing this, right? And so you can trust that the assets are there. They're being managed by the bluest of the blue chips, from a professional standpoint and a security standpoint. And so, with that as table stakes, okay, now how do we go build products that serve these businesses? We started out very simply saying hey, we want to share the underlying revenue with these platforms, right? And so, we have revenue sharing agreements with certain counterparties. The second product that we announced is white labeling, which is really just AUSD, but it's just a different form factor that I think resonate, that idea resonated with people more, that form factor resonated with people more. I think it's become a hot trend. We'll see how long it persists. And with there, we're saying hey, we don't need, we'll just pass on everything. It's and view that as just an additional sort of feature or product. We've announced our instant liquidity product enabling 1-to-1 atomic swaps. But there's a lot of things that we're building, that will help make enterprises interact and interface with stablecoins and the old system in a very seamless, abstracted way. And I think the company that people see in a year will look very different than the company today, but stablecoins are at the core of our business, and we want to deliver that to sort of everyone else in a neutral and institutional grade way.
Nick, so you kind of rattled off AUSD, instant liquidity, and white label, and you're working with these teams, these enterprises, but I'm curious just how exactly are you working with them? What is the underlying function under the hood that you're changing for them, or kind of ripping out of that old system and plugging in with Agora? And then can you name some more people? Like what types of partners are looking at this stuff? I think you mentioned Pepsi. You've mentioned it like a few, but any other ones that you just to, kind of frame up what we're talking about here?
Yeah. So we're money. So we interact with every business, right? Like in a way. And so like the use cases are very different depending on like who we're talking to. But maybe to like break it down, right? Like I saw that, okay, you had all these businesses using USDC and USDT that weren't monetizing it. And I was like, that's crazy. Like this is their platform, right? So a perfect example is, with like a PerpDex or, another on-chain application, like a gaming application, we'll say, hey, like if you use AUSD, like we'll pass through 80 to 90% of the income to you, right? Like why should all that go to Circle and Tether? That's like one use case. White labeled stablecoins, just a different form factor. AUSD goes in, new USD comes out. It's a different logo, different name, right? But that's the asset under the hood is in the collateral is AUSD, right? So you know that it's a super safe asset. And then liquidity begets each other. We're talking to like big major airlines about white labeling, and then we're also talking to like memes and consumer companies about it, right? So like it totally like Western Union was announced yesterday, like the MoneyGrams of the world, like a bunch of different types of folks. Instant liquidity. We really designed this based on feedback from our customers, which is like, hey, like, look, and like also like realizing where the market is today, where the market is 95% USDC, USDT. We're a new asset. People want comfort and the knowledge that they can get in and out of it one-to-one, right? And so we've built that. Actually, like our biggest users of that are trading firms. And some of these intense protocols, right, that are basically like hooking in and atomically swapping and arbing AUSD against some of these other assets, right? So it's a whole host of like companies and customers, ranging from like the Air Asias of the world to like the gaming and memes of the world. But I think for us over time, our customer base is like 80 to 90% like crypto, like very like crypto, right? Whether that's a market maker or fintech or, a stablecoin neobank. And I think our goal is that, over the next 3 years, it becomes 50-50, right? And then 10 years from now, crypto companies will be like 5% or, 10% of our customer base.
Nick, when you mention white labeling stablecoins as a service, talk to us about the pitch for those clients. I think some of our listeners probably already understand why that is so enticing and how they can generate revenue. But let's assume someone is less familiar with how Tether's business model works, how USDC. So like, what are you making possible for those clients?
Yeah. So the way that like traditional payment stablecoins work is you take in $1, put that in a money market fund that earns, 3 to 4% a year. But obviously you can't have it be natively yielding because then it's a security. And also because then there's a whole host of compliance risks, right? Like, what if North Korea buys it and, it's natively yield bearing and you pay North Korea the next day, right? So there's a lot of good reasons why they're structured the way that they are. And so what we basically say is like, hey, like we'll just pass through some of this income, right? So, we know the smart contract address that's affiliated with your platform or the wallet address is. We track it on a block by block basis. So we know that, oh, hey, today you were, 5% of the network. We made $1 million. Like we owe you $50K for today, right? And so we can do that at the block level and track yield in real time, which is like super interesting. It has like a lot of use cases that are applicable to the traditional world. And so that's how it works. And what I would say like with the white label is like, it's just a different form factor of AUSD. I think there's, it's become sort of the meta. I think it'll fall a little bit out of popularity, in the next couple of years when, once you create your own like stablecoin, like it's there forever, right? Like, and so what I tell people is like, look, unless you're like consumer facing or are really invested in this or know you're going to have like 100 million or like $1 billion in deposits, just use AUSD, we'll pay you. We deal with everything anyways, right? The treasury, management, compliance, right? The payment. And so you get all the benefits that you want, which is, right, the economics, but you don't have to deal with anything else, right? And especially if it's like not core to your business, which like money movement is not core to many businesses, right? Like why go through the headache of like having a white label stable when you can get paid otherwise? But our goal is like to offer a menu of products and say, hey, choose your adventure and we'll help you regardless. But I try to be like very, open about the trade-offs.
Just one more on, how Agora makes money exactly. So I think I'm assuming it's the money market funds is probably a big part of that component, right? That 3 to 4%, maybe it's T-bill yield. But are there other ways that we're maybe not seeing how Agora can make income? Like, is there any sort of micro fee on payments, or what's like the holistic picture of how Agora makes money, I guess?
Yeah, so without giving too much away, like I would say, look, these are the things that could make sense in the future, but like transaction based, right? So like building swapping mechanisms against other assets, right? It could be non-USD stablecoins, right? It could be crypto. It could be against other stablecoins and charging, right, like a fee. For that, introducing other forms of transaction, based use cases like cards, lending. There's a whole host of things that I think you could imagine, an issuer monetizing, right? Like I sort of think of us like a central bank, which gives us a lot of unique things that we can do from a capital efficiency perspective that we will monetize in the future.
As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and Aave. To learn more about Maple, go to maple.finance. River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi. Nick, in terms of competitors, let's talk about competitors within the digital asset space versus those in legacy finance. So first, like, where do you see overlay with other folks doing great work in the digital asset space? Like, who would be an on-chain competitor to Agora?
Yeah, I think obviously Tether and Circle are the big guys. Someone that also I think has started to crop up is Paxos and some of the work that they do. I would say now because it's very early, like people position us against people that I wouldn't view as like competitors, right? Like maybe like Anchorage is now doing some stablecoin stuff, but I would say we're centralized, we're licensed, and like that's the set. Like we're going after the enterprises and companies where that also matters, right? I think you have a lot of some of these like on-chain like stablecoin liquidity protocols or something that are like not licensed, they're not issuers. Like I don't really view them as like competitors. Like I view them as like fundamentally different products. Like another good example is, right, a lot of these like tokenized hedge funds, right, or like yield products, like people like lump in as like yield bearing stable coins. And I'm like, those are, one, they're not stable coins, to like, they're like not competitive, like remotely, right? If you want to buy like a treasury fund or put cash in the bank, that is like entirely different than like investing in like the basis trade or like a collateralized BTC lending yield bearing asset. You know what I mean? It's like fundamentally super different things. So for us, I think, the most about, Circle and Paxos, at least on like the stablecoin issuance side.
And then in terms of legacy finance, like maybe like a Visa or MasterCard, like where do you see incumbents that you would compete with?
Yeah, so Visa and MasterCard are actually very complementary to us, right? So if you think about them, they're like open network businesses, right? You have all these banks that issue on top of like the Visa network, right? And so I would view like the Visa and the MasterCards as like partners of ours. I think in terms of maybe like fintech competitors, it's like Stripe is like the most obvious one, right? Because they bought Bridge, and so now Stripe is really running that company. And so they're, obviously, doing like open issuance as well, that they're calling it, which is like, I think not really intelligently designed. And I kind of went into that in like the USDH proposal. And I think Paxos like agreed, right? Is like people think, oh, like stablecoin, it's just money in a bank and you issue it. Like there's so much stuff that goes on behind the scenes in terms of liquidity management, having different bank accounts at like important institutions so that you can close the loop and market makers can, settle 24/7. Like there's all these things that people don't really know about. But I would say Stripe is probably the biggest. And then maybe some of the other fintechs, if they actually move like aggressively into the space, like, an AirWallex or like a Wise, they obviously are like much more enterprise facing cross-border payments, but like that's where we're moving. Right. And so, it's just, you're in this industry where there's a bunch of different layers and people are coming at it from different perspectives. And so they'll have different strengths and different gaps in their products. But ultimately, I think this is an enormous market. Right. And so we'll probably have like a lot of co-opetition like we do today.
What are those conversations like when you are speaking with potential clients about launching stable coins? Where is their interest? How do they ultimately decide with you where to launch a stable coin?
So most of them have no idea where to start, right? But I think, what they care about is predictable low fees, right? What is the surrounding infrastructure support? And what I mean by that is like custody support, right? Like does Fireblocks and Fortify and DFNS support this, right? What crypto accounting providers support this? Is this supported by on-chain monitoring solutions like Chainalysis, TRM? Right? Those are all the things that matter and people think about, right? In addition to, the VM and, how cheap and predictable are the fees. I would say like we, guide them somewhat. But they also sometimes come to us through foundations since they may have already made that decision. We generally like are pretty neutral and like certainly don't have preferences. I would say we often do a similar thing that we do with like AUSD versus like a white label. Is like, look, these are the pros and cons of this. These are the pros and cons of this. Like, and saying the same about chains as well, right? Is like, because it's like, oh, maybe we want to really integrate with this one app on this chain. Okay, then you should probably do that chain, right? Like, and so I think we always just try to be neutral and like high integrity and like honest about like our views on different products. Like I was talking to the head of fintech at Grab, and he was like asking me about like all the different wallet providers. I was like, look, this is where these guys are, from our experience, these guys are strong, these guys are weak. This is the menu of options. We don't do this. Here you go. Like, go do your RFP, and I would talk to these three people only, right? Like, so like we just try to be honest and good partners to people. Always say like, do your own research, but like, this is our input.
I want to switch gears here a bit. We had Pranav Kanad on, who's, I believe, on VanEck Liquid side, an investor at VanEck. And we asked him the same question, but basically there's everybody telling you that stablecoins is the next big thing. I think for, investors or listeners out there, they're like, well, how do I get involved in the upside of stablecoins? Like, you obviously don't just go buy 100 USDC because that's clearly no upside. But are there any opportunities in maybe traditional Web 2 world or things in the Web 3 world that you see that are like, hey, this would be a good infrastructure play, or I feel like this is, I guess, an important substrate for this stablecoin boom? I know you've got an investment background, so just kind of curious how you see that investment side of stablecoins.
I mean, selfishly, I would say that Agora is probably the best beta that you could get from stablecoins. In traditional markets, obviously there's been a bunch of exchanges of IPO'd, Circle's IPO'd. I think there's, what I would look for is public companies that are like really like leaning in and can take a lot of sort of the cross-sell of products that banks typically do, right? So what I would do is like look at some of like the neo brokers or neo banks on like the retail side. Like, so Robinhood is like a great example of this, because not only are they benefiting from stable coins, but they're like, we're like, oh, like I'm now a employee, instead of like getting payroll to my bank account, I can get payroll through stablecoins directly to Robinhood, and now Robinhood is my bank, it's my broker, it's everything, right? So I would look at those types of businesses that are really like not just capturing the stablecoin trend, but like this broader like digital adoption trend. And then the others are a little bit tough, right? Because like, okay, is Circle overvalued, right? 30 billion, I would probably argue yes, even though that's not in my interest to do so because I run a stablecoin business. So like that's where I would spend a lot of my time. And then like I like companies like Transfer, Wise, it was originally TransferWise, now Wise. If they decide to start to move into digital assets more seriously, although like I don't know what their PE ratio or their multiples are, but like that's where like I would start to look is companies that can really start to threaten like some of the banks' existing lines of business. I like tweeted this out like a few weeks ago, but 3 years ago, the market cap of Charles Schwab, your grandfather's broker, to Robinhood was like 22-1. And like now it's almost 1-1. Like Robinhood is basically like caught up to like Charles Schwab's market cap. And so I think you got to look at like some spread trades like that are like, what was the grandfather or the old person version of this, right? And like, what's the new age application or business?
Yeah, that's a crazy stat. That really contextualizes the growth. Yeah.
Like, dude, that is insane. Like, crazy. 3 years. Like, a lot of banks are going to get totally hosed by this transformation, and payment companies too. Like, you're going to have like half of these companies probably, like Fiserv today, I just saw like lost like 40% of their like market cap like in one day, which is like insane.
Who is that?
Fiserv. They power like a lot of like the traditional banks and fintechs in the United States. They're like one of those people that is a huge company that you never see. Like Jack Henry is another one. Jack Henry powers like literally like hundreds of thousands of banks in the US. You probably never heard of it. Like,
see, I would never short anything. I'm terrible at shorting. It scares the hell out of me.
I also don't short things either.
This is not financial advice, but there could be some opportunities in there for people that do use the short button. I don't use the short button, just buy and long. But anyways, hey, I actually got another question for you. So in on this theme of like, hey, how do we get upside this? You said obviously you're biased, but Agora. I got to check this off the list. I'm pretty sure there is going to be no Agora token, but can you confirm or deny potentially?
Yes. There's going to be no Agora token as of this moment in time. So
as of this moment in time,
well, no plans. We're not planning to do it, but like you never say never.
Okay. Wink, wink. No, just kidding. All right.
Nick, remind us, when was the last round that you raised for Agora? And I guess, is there any chance you're going to raise more money in the future?
Yeah, so we started the business 2 years ago from this month, raised a seed round led by Dragonfly. Most recent led a 50 million Series A, or raised a 50 million Series A from Paradigm and Dragonfly. And so, we're working with both of those teams closely. And yeah, we're well capitalized for now, but there's a lot of opportunity, and we'll probably pick our heads up again sometime in a year or year plus time.
Nick, before we start to wrap up, what's next for Agora?
Yeah, so I guess just looking through the end of this year, we're really excited for some new ecosystems to go live, right? So Monad being one of them, but also new products from like some partners of ours, right? So we're money. And so like a lot of what we try to do is to get people to build interesting products on top of us. So we have a number of perp dexes, that are going to go live with AUSD as collateral. The Upshift team, which builds vaults, is launching Earn AUSD on multiple chains, right? So, like sort of Athena is the basis trade hedge fund to Tether. Like we're going to have like our own, hedge fund, but we also like work with, the Midases of the world and a bunch of other people. And the goal for us is like, we don't want to own this, kind of like Athena's trying to own it full stack. It's like, we want everyone to build on top of us, build interesting products. We'll help support and incentivize and do BD with you. So that's through the end of this year. And then for us, it's going to be, financial home base V1 and some of this neobanking stuff that I was hinting at earlier. But like, that's going to be a big focus for us next year. And then, just continuing to grow AUSD, our white label solution, and serve more businesses.
Guys, I think this is a great place for us to wrap up. So I want to remind our listeners that they can learn more about Agora by going to agora.finance. They should follow with AUSD on X. That's the Agora handle. And then follow Nick's account. It's Nick_Van_Act. Nick, thank you so much for coming on. Such a pleasure to finally get to meet you. Any final word for us, though, before we go?
Yeah, just say thanks for having me. Appreciate, you guys putting the time in. I'd say, for us, that's kind of it, right? We want to be the enterprise stablecoin infrastructure company. So if you're building and you need to incorporate stablecoins into your business, whether it's a stablecoin, a white label stablecoin, or other stablecoin infrastructure, please reach out.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.